Hello, I'm Dick.
And I'm Eric, and we're the Annuity guys.
Eric, one of the most overlooked questions that folks should be asking about annuities is, what about the annuities that are available in my state?
Well, isn't that just what you asked? You asked the guy in the corner, hey, what annuities do you have?
Well, you would think that, an annuity is an annuity and that, the annuity in every state would be pretty much the same or, close or whatever. Yeah. But there is a dramatic difference, folks. I mean, there's states out there that pretty much destroy all options for everyone. I mean, a good example of that is New York.
Wow.
They have a very, very limited selection for their residents.
We don't want to call them the evil empire, but no, they have restrictions within New York that make certain types of annuities basically non-existent because of some of their regulations and requirements. So, their clients are people probably that live there,
and they would I'm sure say it's in the name of protecting the public.
Right.
And there's others who would say it's in the name of maybe crony capitalism. We'll protect these companies and let them do business. And, it's a lot to do with our healthcare system and not being able to cross state lines, that type of thing, these companies. So I can see, how that goes into the annuities too. But let's talk about some things that we should consider about each state. One of the things that you have to look at is, what are the options that are available in your state?
Exactly. I mean, it's strange, but some states, the same annuity that exists in State A and State B may not have the same benefits as far as growth potential. Mm-hmm. It can be changed just because of some requirements of your state and how they approve it.
Lower rates.
Usually it's tied to the length of the annuity. A lot of times some states say, no, you can't have anything over a 10-year surrender period. Mm-hmm. And sometimes because of that, you have less benefits because the insurance company needs to make their money back quicker is what really happens.
One of the states that we run into a situation with is California, which really limits the long-term care riders on annuities.
Yeah, the home health care type benefits, the what we would call really a long-term care supplement. Yeah, they a lot of times won't provide that option within the annuities at that state.
Yes.
You can have someplace else just because of some of the requirements that California has.
I was probably going the same place you are, the premium tax, thinking about California.
Yeah, I just had a great conversation with one of my clients, and Scott we're just looking at immediate annuity, and he's going, well, what's this premium tax? And I said, well, congratulations.
You live in California.
As a resident of California. And we're not picking on California here today. There are 7 other states and Puerto Rico, if you live in Maine, Nevada, South Dakota, West Virginia, Wyoming, and Florida.
And these premium taxes vary from state to state.
And by type of annuity. Qualified, non-qualified.
Yeah. So some, I think it's the qualified annuity as a whole that doesn't have
a lot of times you won't have a premium tax.
Right, no premium tax.
Right.
On some states.
Right. And the funny thing is, you could have the same exact annuity if you're buying it in California, where you've got basically, let's just call it a 2% premium tax. Mm-hmm. If you're buying it in a place like Illinois here without one, well, guess what? Your payments are basically reduced by 2%.
Right.
For your entire life.
Well, and it varies. Like, West Virginia is about 1%, and you have Nevada is 3.5.
Yeah,
3.5
on non-qualified dollars, and strangely enough, there is actually no tax if they're IRA dollars. Mm-hmm. So when it comes to deciding which dollars to use, you need to know that information as well. That's probably something that you're not really having that discussion a lot of times with your agent. And the one thing I always laugh, and it's a question I often ask when I'm talking to potential clients, it's, do you have a house located in another state? And a lot of times they go, well, why?
Well, why would that matter?
It's just like it's if I were a captive agent and can only sell you one annuity because you live in this state, because that's the only option you have. Mm-hmm. When you have residences in multiple locations, you open up basically the perspective of what you have options to significantly.
Well, and Eric, this does get into the type of advisor that someone's working with.
Sure.
A lot of folks like the feeling and the idea of having a local advisor. But when it comes down to someone who's really well versed in what's really available out there, if you know that there's some very, very good annuities in a certain state, and the state that someone you're talking to is in doesn't really have that particular, company's annuities, you know that those type of options are generally available. You're going to go seeking those even from another insurance company in that state to, so I think that from a national perspective, you have a lot better overview of what is available, throughout the country, and you can work a little stronger towards being able to get those type of benefits for any client if it's at all possible.
Right. I think what the big thing is here, we know the strategy. We know what you're looking for typically. It's giving you the option of saying, hey, guess what? We don't have to just use this one strategy. We have options that open up 3 more strategies or 3 more types of solutions to that one problem. So it's expanding just the options that a client has to get the best possible outcome.
Right. One of the things that some states allow and some don't are market value adjustments.
Yeah. Now, market value adjustment, it always gets fun when we try to describe this basically to the client, but it's basically the way the insurance companies offset any changes in their reserve requirements, the bonds that they have to buy. They just know that if they have to sell into a bad bond environment and take a big loss, they're going to have a way of getting those dollars back.
Right.
And so in some states, they allow you to share it with the policyholder.
Exactly. So basically, the insurance companies sharing the interest rate risk.
Right.
And as a result of that, if the annuity has what we call a market value adjustment, the insurance company can typically give better rates or better benefits on that annuity. And then the surrender charge kind of cuts both ways because it's not as locked in as it would be otherwise without a market value adjustment. It can fluctuate based on interest rates up or down.
Right.
For those folks that have done good planning, they're looking for the best annuities and the best rates. Many times the annuities with market value adjustments give them a better value.
Right. It's because you're basically taking on some of the risk of the changes of leaving early that the insurance company then can basically help share the load.
Right.
So, another aspect is when somebody actually purchases an annuity, there's that, we call it the undue time period or the free look.
Yes.
When you're looking to say, hey, I don't know that I'm sure I want to do this. I have it. How long do I have to review it before it's mine? And that does differ by state. Some are as short as 10 days. Others are as long as 30 days.
Exactly.
And the really strange thing here is that's the state legislated period. Then the insurance carriers get their own weeks on top of it.
Because the state may say it has to be a minimum of 10, but then there's certain insurance carriers that'll say, no, we'll give you 30 days.
Right.
So no problem.
Yeah.
Another thing that happens is we get a lot of changes on a regular basis in these annuities, and they have to go through state approval.
Right.
So these companies have to go through 50 different states to get an approval, and some states will be way out front, quick to approve, and others will have a very lagging type of an approval time.
Right, and I know it's just one of the more popular annuities that rolled out a couple months ago. 32 states initially had it, and now we're getting 2 more and 6 more, and it's different flavors and varieties of that same version, depending on what the Department of Insurance and the insurance carrier actually work out.
Right.
So, we also should mention the State Guarantee Association.
Yes.
That's always a big question when it comes to basically the amount of coverage that a policyholder is going to have, and that does differ by state.
Well, it does, and it differs anywhere from maybe 100,000 up to 500,000.
Yeah.
And yet, there's also other little nuances of each state guarantee association where some will guarantee, multiple different contracts, and some will just guarantee up to a certain dollar amount. They don't care how many contracts you have. And so these are things that, again, when you're coming from a national perspective, you're going to look at all of these things, and you're going to be able to advise that client, hey, where does this fit in your strategy?
Right. And the one piece that is often overlooked, it's the state of residence is the Guarantee Association. So the funny thing is, if you buy it in state A, and we'll use Illinois here, and then you move someplace warmer in your retirement, your actually Guarantee Association is now the warmer location where you're at.
Right.
And so that's going to be the primary one. And if for some reason the insurance company doesn't have that particular contract there, then it reverts back to the state of domicile where the carrier is actually located.
Yes.
So, another interesting tip. You can now share that with your friends. So.
So, Eric, when it comes right down to it and someone looks at their state situation, can that be a real determining factor in whether they move forward with annuities or they don't move forward with annuities?
Is it a determining factor?
Mm-hmm.
No. I mean, because you're not going to go move your home just to buy an annuity. But does it become part of the equation? Yes, because there's different factors based off where you're
and
living.
you may not buy an annuity, because of the state you're in,
Yes.
because of what's available. So in some ways there are determining factors, but in terms of, like you say, determining that you're going to pick up and move to go buy an annuity, it's probably not likely.
Honey, we need to pull her all up. We're going down. We're going to Illinois because we need that annuity. So, you don't see that too often.